In this video, we're looking at a Power BI financials report working against Sage 50 accounts. And I suppose one of the things I would like you to take away from this video is an understanding that even if your Sage 50 account system is quite old and you've been using it for quite a long time, and perhaps you've got your chart of accounts in a bit of a spaghetti code, it doesn't matter because you can untangle that and automate it using Power BI. So let's take a quick look at the report. We have a income statement with several different views of the income statement. We have balance sheet, we have cash flow, we have receivables, and then because we're both reading the Sage chart of accounts, we're also created a separate view of the chart of accounts. We have a chart of accounts check on a couple of pages just so we can visualize very quickly what accounts are mapped to where within our custom chart of accounts, as it were. The data is Sage 50 data. We've got about 330,000 journals. And then we also have budgets that are coming in externally from a folder of Excel files on OneDrive. So on this first page, we're looking at our P&L, profit and loss actual versus budget. And the first thing you might notice is that we're looking at a rolling 12 months to March the 25th, or I can select February, sorry, not March, to March 25. If I select February, we're looking at the rolling 12 months to February 25, and so on. So straight away, we can see we can do something in Power BI like a rolling 12-month view that you would never be able to do natively in Sage 50. The company that we have set up is a company with a fiscal year that is running from June through to May. And we have a 3-click date range selection. So we select the fiscal year, the month ending. So we select fiscal year 25, month ending March. And that sets our last date in our date range, 31st of March 25. And then we select the period that we want to look at. We can just look at March. We can look year to date, or we can look at 12 months. And of course, actually, if we wanted to set up other analysis periods, we could, or if you wanted to set up a custom date range selector, we could. But this kind of setup works very well for financials reporting, where typically you may just want to look at the month, the year to date, rolling 12 months, or possibly a quarterly view, or rolling 3 months view, or something like that. We have 2 charts of accounts. We have chart 1, which is a chart of accounts that we've read directly from Sage, and it's the default chart of accounts that has been set up in Sage, and we're presenting it here and reconstructing it basically in Power BI. And then we also have an additional chart of accounts that we've set up in Excel that we've called EBITDA. And this is the kind of scenario you may have particularly if your Sage system is quite old and you no longer have the flexibility to do the mapping within the standard chart of accounts structure that you have in Sage, and using an external tool like Excel can be very useful for that. But that brings in problems because it brings in challenges as to know and to check, have we got all the accounts mapped and are they mapping to the right place? But we'll come on to that later. The main income statement, we're looking at the actual as a percentage of sales, the budget, the variance against budget, and the variance as a percentage. Now we're going to go back to year to date rather than 12 months. And we can see that our budget year to date for net profit was 14.279 million. Which we also see here down at the bottom of the chart, at the bottom of the income statement. And we can see that our actual is 8.5 million instead of 14.279. And we can see that a substantial difference, really. I mean, we've got a reduction in sales and we've got an improvement in cost of goods sold, most likely because of the reduction in sales. But what we can also see is that we've got our SG&A is worse despite the fact that our sales are down. So that's probably worrying. We have, as I say, we've got 330,000 transactions in the system, but we can right click and we say, okay, where did that 95.8 million come from? We can right click on that and drill through, and that tells us exactly where it came from. So we can see it broken down by months, we can see it broken down by nominal code, we can see it broken down by supplier, and we can see it broken down by individual transaction with the transaction details highlighted there. We have a similar view for the actual versus previous year. We can go on to there. And just one thing I didn't show you on the last page, although we're showing the actual as a percentage of sales, we can also show the previous year or the budget as a percentage of sales just by clicking this button, and we switch the calculation here from being the absolute numbers to the percentage of sales. So we can compare our actual as a percentage of sales with our previous year or our budget as a percentage of sales, and that can be a useful exercise to do, particularly in volatile when we have volatile sales. We have a year-to-date plus view where basically we have the actuals year-to-date through to the end of March. We've got the remainder as budget, or we can show the remainder as previous year, and then the total outturn. And we can turn that highlighting off, or we can configure it only to highlight above or below a certain amount. We can show, okay, a cumulative view instead of month by month. So instead of aggregating period by period, we're aggregating on a cumulative basis as we go through the year. And you can see this is, it's pretty fast considering that we're working against, well, it's not a large data set, 330,000 transactions. I would call a kind of moderate data set for Sage 50. And of course, it doesn't have to be just budget. It could be forecast. It could be some kind of scenario that we put in there, because I'm just reading those budgets from an external OneDrive folder. We could easily replace or have as well a folder of forecasts, a folder of different types of budget or scenarios that we want to compare against. Then for those that don't immediately want to drill through but want to see the breakdown by nominal code, then we've got this view here where we've got, I call it the account level analysis. We've got the income statement on the left and the detail broken down by individual account on the right hand side. And in true Power BI fashion, we can select a row here and it'll filter the table on the right and show you the breakdown by nominal code. And of course we still can drill through if we want to see actually we would be able to, and of course we still can drill through if we want to see what made up those transactions. We have a sales analysis where we've broken down the sales numbers and broken it down by supplier and as a percentage of the total. So we can see straight away that 16.5% of our total sales this year to date have come from one customer. And we can see our cumulative performance year to date with our actuals the previous year. So we can see we're tracking our previous year fairly closely, but well behind our budget in terms of the overall forecast. And we have a similar view for expense analysis. And we have a similar view for expense analysis, but broken down by vendor, and also department and project analysis, where we have the income statement on the left broken down by department or by project, showing the contribution by department and project year to date to March 25. So that's kind of the income. That's kind of a whistle-stop tour through the income statement. Now onto the balance sheet. And again, just like on the income statement, we have two charts set up. We've got chart 1, which shows the setup as in Sage. We've got the EBITDA view, which is just breaking it down slightly differently. And it takes into account, as we may want, the floating categories that we have set up. So actually, if I go back to fiscal year 23, and we can see on this tax line, actually, where this is basically primarily VAT, and we're starting off where we're owed money back, so that's an asset, and then through it drops down and becomes a liability. And that's just making use of the floating account settings that we have set up in Sage. We can focus more closely on the working capital. And for the year to date to March 25, we have the opening balance. We can select between seeing the minimum, basically the average, maximum, minimum, or movement. So we can look at the movement, which is basically going to be the closing minus the opening. The average, which will take the average balance based on the average across every single day. It's taking the average closing balance over every single day, year to date, to March, to the end of March. Or we can take a look at the minimum balance, which may well be something you want to look at for the working capital. And just like on the income statement, on the balance sheet, we have a drill through. We can drill through. Let's drill through to see what's happened on the bank. We drill through to the balance sheet. And here we can see year to date, the bank balance as it's a bit confusing showing the minimum on there. Let's go back and change that to the movement. And we'll drill through. So our opening balance was 21.7 million. Our closing balance 26.5 million with a movement of 4.8 million. And we'll see how that breaks down by month, how it breaks down by bank account, and all the individual transactions that make that up. And we can hover over an individual transaction and we see the details. Take a look at the monthly balance sheet. And here we're looking at the opening with the monthly movement and then the closing, with the highlighting showing the movement. So the green would be would be an increase in assets, red would be a decrease in assets, and the opposite for liabilities. Or instead of looking at the opening and monthly movement and closing, we can just look at the monthly closing, the more traditional view. So we've got the opening balance for the year, and then we've got the monthly closing balance there. And then we have a trial balance. The opening balance, and we see the total is not coming to anything. The total of all the movements is not coming to anything, and the closing balance and everything's not coming to anything, which is what we would expect, just the same way as on our total balance sheet. However, it can be useful if you want to, if we select the bank again as an example, we can see how that breaks down by individual account, or indeed any of these other rows. Then we have a cash flow statement, which is not in your Sage 50 accounts set of reports by default. And because we have every single journal entry here, basically what we've done and what we can do is we can build up our cash flow statement using the direct method, which also then means we can drill through to see all the details of every single journal entry that made up this cash flow statement. So we've got the traditional breakdown, operating, investing, and financing cash flows, with the net amount sitting here as a custom row. And then finally, we're just looking at the bank accounts that are set up and defined within Sage as bank accounts. And we can see that everything's in balance, which it should be, of course. And then because we are building this up using the direct method, we can right click on that, we can drill through, and we can see where that 135 million came from, right down to the individual customers, the individual months. We can see what happened in June, and which customers came from. So the 9.2 million came from the biggest one was Briarwood Radiance, that actually produced over half the cash in June. However, it's down on the previous year. And then we can look at cash flow over a monthly. We can look at cash flow over a monthly period or monthly view. So basically showing the cash flows month on month. And then finally, we take a look at receivables. And in this particular case, we have basically a list of customers. We're looking at the end of March 25, we've got the opening balance for the clients from 12 months ago, the invoices were received over the last 12 months, and then the receipts from the customer with the closing balance as of now, as of the end of March 25. And then how that breaks down between current one month, 2 months, 3 months, or 4 months or more. But we can also look at the trends based on debtor days. So if we take an example, say Dewfield, or it doesn't matter, Elmswood Serenity, we can see how the debtor days for that customer has trended over time. It seems typically be hovering, 60, 70, 80 is typical. The axis here is basically the number of weeks ago. So zero is this week. We're in April now, so we've cut this off as period ending March. So that's 2 weeks ago and 3 weeks ago and so on. So that's basically a look back in time, and we can see the trends. But we can also then drill through on the particular customer, and we can see actually what has happened with that customer over the last 12 months. Invoices, receipts, net movement, and closing balance by month with all the individual transactions broken down for the client. And then finally, what I said was that we've brought in the chart of accounts from Sage, but we have also defined externally a chart of accounts in Excel. And if we do that, then it's obviously very important that we can have a system where we can quickly check if we done all the correct mappings. So again, that's quite nice and easy to do in Power BI. And here we take a look at the income statement as an example. And we're looking at the EBITDA chart of accounts, which is the one we set up manually in Excel. And we're looking at all types of subtotals. So we have two types of subtotal, irregular and regular. So a regular subtotal would be a natural hierarchy like sales, cost of goods sold, SG&A, and so on. And then, but also on the income statement, remember we have some intermediate subtotals like gross profit and adjusted EBITDA, and those we call irregular subtotals. So if we select regular, basically each account should map to one and one only of these main groupings, and we can quickly scan down the right hand side and we can see that on the income statement, we have a total of one for every single account, which means that every single nominal code is mapped once on the income statement for the main regular rows on the income statement. And we can see, if we take sales, we can see, okay, there are 11 accounts mapped to sales. And then we've got 10 accounts mapped to other income. We've got 34 accounts mapped to cost of goods sold, 77 to SG&A, and so on. It's a very fast way of just checking have we got the validation right. And if you went in tomorrow and added a new nominal code into Sage, if you went in tomorrow and added a new nominal code into Sage, that code would appear in this list and it wouldn't be mapped, and we can stick a little highlighting thing on here to identify that it's not mapped. And in fact, we have an example of that in the balance sheet. And here we've got a nominal code 1250 for credit card receipts, and that's not mapped to anything, and it needs to be mapped. In this particular case right now, I'm not concerned because I happen to know that we don't have any journal entries against this nominal code, but it's a very, very quick visual check to make sure that the mapping that we've done is correct. Then finally, the beauty of this is once you've got it all set up, you can automate it. And by automate it, what I mean is if you have a new budget, you just drop the new budget workbook into the folder that this Power BI report is reading. Or if you're updating a forecast regularly, you just update the updated forecast and it'll bring that into the report. Secondly, you update Sage and you can set Power BI automatically to read the data from Sage and refresh the data from Sage. And depending on your Power BI license, that can be up to 48 times a day, automatically refreshing your data from Sage into the report. If you're just using a Power BI Pro license, then it could be up to 8 times a day, which is more than sufficient for most people, which is more than sufficient for most organizations.